Banks' fear of foreclosure tsunami. Let's have a look. Good morning, everyone. Florian.Heise here, and welcome to another episode of HeiseSays. Once again, I have my stein of coffee, which I'm frankly just using to warm up my hands because it's 9 degrees right now in Brisbane. We're getting, a bit of a cold hit at the moment. I think someone mentioned in the comments that it was even warmer in Tasmania, right down south in Australia, than it was when I was doing my workouts this morning. I think I had 11 degrees. They had a nice, crisp 13 degrees. But the Tasmanians, they're adapted to it. Us soft Queenslanders, we're not used to anything, anything below 22 degrees. It's bloody winter. It's the end of the world. So I'm having to walk around with a beanie, and there's no way I'm putting it on footage, because then I'll definitely look like Tim Pool. So let's jump in here and have a look at this article, everyone. Interest-only loan reprieve coming as banks try to avoid a financial storm, but investors fear it's not enough. Now, we have all heard the stories or been sold the courses or guaranteed schemes to make money, where people are using the capital gain in usually their home to buy an investment property, interest only, rent it out, and then use the capital gain in that to do it again, and do it again, and do it again. And then an article will appear where, bartender, genius, buys 30 properties. Anyone can do it. You've seen them. It's not just been me. Now, here's the thing. We've also started seeing other articles of these genius or even rent investors who can't even bring together another $100 to cover their rent when times get tough. And Martin North and others have been discussing the impending stress and impact all these interest-only loans, when they flip over to interest plus principal, may have on the market. And people have been refinancing the interest-only. They've been pushing it again, getting another one. Then APRA kind of tightened the reins on that, and everyone got worried. And now, of course, they've loosened it again. So we'll have to see. We'll have to see. Because, honestly, and here's the house of cards that Australia's built on, honestly, the banks are going to do everything they can just to mitigate their risk. They're not our friends, not by any measure. They just want to maximize their profit. And that's the business they're in. Don't let the ads fool you. So let's have a look at this, guys. Because here's the thing. I know a lot of people are hoping we're going to see a huge housing crash. I'd rather see a decrease in the value of housing due to technology and more stock available on the market by building new stock. But we're not seeing that, are we? We're not seeing that. The technology hasn't really improved the efficiencies of construction. It's just gone up and up and up because we've got a bubble in that sector. So let's have a look at this. Will this be the first pin to actually prop the property sector? Pop. Until I'm cold. One of Australia's major banks has offered relief to thousands of property investors who hold interest-only home loans, responding to claims the industry is not doing enough to stave off a potential property crisis. Westpac has pledged to extend borrowers' interest-only period after WA Senator Dean Smith criticised the industry for failing to support landlords, many of whom are self-funded retirees who were struggling with high repayments due to their loans switching to principal and interest. So, I mean, think about this. This is going to mitigate a potentially big stress for people in the short term, but it's going to lock them to the bank. Because what if their rental returns take a hit? And we're seeing that more and more reported. There was 10,000 approved rental reductions in Victoria recently. Senator Smith said he would canvass support for a Senate inquiry into the bank's treatment of property investors after hearing disturbing stories of financial hardship. He said he feared investors pushed to the wall could lead to a worst-case scenario of a tsunami of forced sales. Westpac has now confirmed borrowers can apply to extend the interest-only period of their loans for up to a year instead of being forced to start paying the principal of their loans when it expires. How nice is the bank? I mean, should we have senators? I guess, we're just in a non-hardship civilization now, aren't we? We really are. We really are. No one wants to do it tough. No one wants to be prepared. If you even criticize these people in these articles that are being propped up as poor victims, victim blaming. Oh, I can't afford to pay my rent, so I'm not. Oh, I can't afford to pay off my investment property. Oh, I didn't save anything aside. When I was out having smashed Av, what is it, smashed Av and eggs? Although I quite like smashed avocado. Well, I haven't had it in a while, to be honest. This includes allowing interest-only customers to extend their loan terms for up to 12 months, or customers on principal and interest repayments to switch to interest-only repayments for the same period, Will Rankin, Westpac's general manager of home ownership, said. We recognize that the pandemic has had a significant impact on household finances, and these challenges will provide affected customers with more flexibility with their home loan repayments during this time. Investors fear we'll have nothing left. For Adelaide couple Deanne and Brian McShane, whose loans are with a different bank, Westpac's statement offers little hope. Then change banks. Change banks. Talk to a broker. Pick up a phone. And the reason why I'm critical of the ABC's apparent bias is that it's tax funded. I'm not reading Sky News here. I'm not reading, the red left or whatever, green left. This is funded by all of us. So there should be both sides of the argument portrayed. You'd hope. Or maybe I'm just expecting too much of journalism. It's not academic, is it? It's not academic writing. What do you think, guys? Am I expecting too much? Let me know in the comments. The self-funded retirees were already struggling with their loan repayments before the pandemic hit, and now the tenants on the Gold Coast have had to break their lease due to the pandemic. Well, they were already struggling before any of this happened, so sell a property. It's easy. Miss McShane, a former administrative assistant, and her husband, an ex-electrician, started investing in property 20 years ago to try and fund their retirement. They currently have 3 investment properties, 2 in Queensland and 1 in Western Australia. But instead of earning an income, hang on, I need good, nice and warm. But instead of earning an income from them, the couple in their 60s are paying $9,000 a month to cover their loans, which switched from interest only to principal and interest last year. So they've been investing in 20 years in property. Why haven't they paid them off? Are they borrowing against these properties hoping that there'd be no downturn in their retirement and expecting just to get rental income? He's a Sparky, Sparkies they're pretty smart people. They should know what they're doing. Mr. McShane said the couple were running out of funds and would ultimately be forced to sell in the falling housing market. Okay, that's called life. You're 60, you should have been through some stuff. He would have been through the recession. He would have definitely been through the last recession. There will come a day when we're going to run out of money because we are paying all this principal and we'll have to sell everything and we'll have nothing left, he said. We'll have to rely on the pension. Well then, you don't have anything. You don't have anything. If the value of your properties is equal to... What's your LVR? If it's 1-to-1, you don't own anything, guys. What are you kidding? You're acting as the bank's middleman and trying to skim off the top. And that's why we invested in property. We didn't want to be a burden. Well, see, this is the thing. Don't feel like you're a burden if you get the pension. Because the government has forced you to give them money for your entire life. Every paycheck, every time you buy petrol, every time you get a pack of smokes. Every time you have a beer. Every time you go shopping, they've forced you to pay them. Every bloody time. So don't feel like a burden. Every time you bought one of your properties, you paid the government. So, while I'm not crying tears for you over potentially having to sell a property, I think you got to realize how you've been shafted, mate, for most of your life. That's the thing. Most people don't get it, do they? They don't really appreciate it. The couple said they asked their bank 12 months ago if they could retain their interest-only terms, but that their application was rejected because they were no longer in the workforce. They said the bank rang them earlier this week to indicate they could apply for a new loan, but the pair had little confidence that it will be approved. So investors are not fat cats. And, I mean, this is true. This is true because so much of the wealth of our civilization has just gone into property, guys. Everyone's been in it. Everyone. And that's why they will do everything they can to stop this bubble bursting. Because you've got a generation of people that only know pretty much good times. The last recession they had, they were 60. He was in his 40s. Wait a minute, no. When was the last recession? Early 90s. That was 30 years ago, wasn't it? Sydney investor Mike Scotland, a former school teacher, owes $1.1 million to the banks is in a similar predicament. How the hell does a teacher get a $1.1 million loan? Oh, I guess, they are unionized industries, aren't they? He should go back to teaching then. It's not like you can't do part-time teaching to pay your loans off. Why don't they go back to work? Teaching's always in demand. Mr. Scotland has 6 investment properties and all the loans have switched to principal and interest. 6! 6 guys. Are we meant to feel sorry for these people? Why doesn't he have 3 paid off? Why doesn't he have 2 completely paid off? Then he wouldn't have to worry. Why isn't he positively geared? We've got people in the comments saying, I've got an investment property, it's positively geared. I don't care. So much less stress. They're trying to ride the train up. And we wonder why. We wonder why, everyone, property prices have just flown up. And I'm getting some issues here with my Stream Deck. But you can see here, just from 2006, let alone keep going further back. Everyone's in on the table. Everyone has 3 to 6 houses. The rationale was that there was no way to gain wealth in Australia unless you invented a better mousetrap, win the lottery, had a brilliant business, or maybe you do a bit of investment, he said. People think property investors are multi-millionaires, but probably about 40% of them never make a profit. They're not rich fat cats, they're just people trying to get ahead for the most part. So values and rents fall simultaneously. Mr. Scotland said all of his properties had either fallen in value or flatlined, while rents had also dropped. Well, this is the thing. It is tough for people to get ahead in Australia because we're taxed to oblivion. And the government just wastes money everywhere. Nothing the government gives you is free, guys. Even if you're getting it for free. Don't worry. They'll make you pay for it eventually. He envisaged he would have to sell in 8 or 9 months' time at a loss. So I'm heading towards a decline. I'm heading towards a cliff, he said. The banks are putting a lot of pressure on the economy. That's really the situation. Property investors to be hardest hit in the pandemic downturn. Well, see, this is why, for all of this property stuff, I would argue we need to just simply implement a process where people are allowed to write off the interest on their primary residence. Citizens should be allowed, of this civilization, should be allowed to ensure housing for their family before they pay the government. We don't need more social housing. We need people to be able to hold on to their own bloody money. Property investors to be hit hardest in the downturn. Westpac's policy is in line with recent advice from the Australian Securities and Investment Commission that the banks could extend interest-only terms during the pandemic and it would not trigger responsible lending obligations. See, they're changing all the rules, guys. This is the thing. They're doing everything they can to save these boomers. Bloody hell. And I feel sorry for them. I really do. Because how much stress is that guy under? That he's got 6 of. He's just kept doing the same trick again and again and again and thought he's going to, get ahead. Chief economist with REA Group narrator Kniesby said property investors will be most affected by the pandemic because of the impact on the rental market from job losses. But she said it was in the bank's interest to support their customers through the difficult times. I can't see it happening that the banks would allow wholesale defaults of loans or wholesale distress in the property market by forcing people to sell to pay back debt, she said. The banks are well capitalized. It's not in their interest for people to start defaulting on loans or selling their properties at a loss. Of course not. They want to keep their property, under control. They want to keep their interest payments flowing in. It's a good little interest setup they have. And here's the thing, guys. If you want to stick it to the banks, I think you got to get off the treadmill, get out of the serfdom. The mortgage serfdom that we're all finding ourselves in. Ms. Kniesby said crunch time for the housing market would come when borrowers, including investors, reached the end of the leniency period for mortgage deferrals the banks had introduced. The big concern is now what will happen after that 6 months, she said. Exactly, guys. We haven't been in this very long. You look at the Great Depression, you look at how that rolled out over time. 1 or 2 months is nothing. So, creating more problems for the future. Banking analyst Brett and Monsieur said the banks had already offered considerable relief to mortgages, granting relief from paying interest on mortgagees. It's not like they're taking a hard approach to their customers, he said. Well, yeah, he's right. They're not. They are not, guys. They are actually taking the most sympathetic approach they have ever taken. But of course, there are obviously examples that this senator is aware of where customers are not getting the sort of relief from the major banks that others are. Well, yeah, they're being soft. They're being soft. This generation that's made all this money in property is getting the softest treatment from the banks in living memory. Just think about that. When people were going under in the 80s, when you had double-digit interest rates, because all of this talk is when we've got a cash rate in the gutter, virtually 0%. So people have just over-leveraged. They've just over-leveraged. Why the hell does a former teacher have 6 investment properties and none of them paid off? Is it just cool to ride debt? Is it just cool to ride debt? It seems just ludicrous, doesn't it? It seems just ludicrous. So, NAB issued a statement saying it had a team contacting customers approaching the end of their interest-only terms to work with them on the right solution, which can include restructuring a loan if required. This included a fast-track process for customers with interest-only loans due to expire in the next 6 months to extend their interest-only period for a year, but this would not apply to borrowers who had reached the maximum interest-only term. The ANZ did not respond to the question of extending interest-only loan periods, but said customers could request a repayment deferral on their home loans for up to 6 months, and this included investors paying interest only. Just think about that. If you're paying interest only and request a deferral on that, that's just going to make it even worse. The bank said 105,000 home loan customers had sought assistance. Senator Dean Smith said he welcomed the prospect of more flexibility by the banks, providing the application process for borrowers was not onerous and requests for extensions were actually granted. It's encouraging to see one of Australia's major lending institutions change its policy towards the extension of interest-only loans, but these changes now need to be made industry-wide, he said. I again call on the entire Australian banking and finance sector to extend the interest-only loan periods until the pandemic's financial fallout has passed. And what happens if the fallout doesn't pass? What happens if it keeps going? So, what do you think, everyone? Do you feel sorry for these property investors? In a way, I do. In a way, I do. I mean, they've been sucking into it. I mean, how can you get into this trap? I mean, he's got 6 properties. He only owns 1.1 million. He should be able to sell a couple of them and be debt-free. What's wrong with that? Why wouldn't you do that? I don't understand. Am I doing that victim-blaming thing again, guys, that I keep doing every time I read these ABC articles? That's what you're telling me in the comments. I mean, look at that. Just sell your Gold Coast properties. Pay off the other one, sit on that, you'll be fine. You're not going to be as luxurious. You may have to, your lifestyle may have to take a hit. Or is this what we're seeing? The Australian version of, what is it? The hidden secrets of money, where all the boomers, all their retirement savings disappear. Is this our version of that? As always, everyone, please let me know your thoughts and opinions in the comments below. Thank you for watching. What do you think? Where do you think this will head? Are you worried about your housing, your property? Have you borrowed one after the other, and you're going to sell a few to get down your debt? Or are you just sitting there without debt and just watching from the sidelines? As always, thanks for watching. Please like, share, and subscribe. If you're a fan and you want to support us, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us via our affiliate links at Amazon or eBay. You can use Gold Pass from the Perth Mint, buy a merch from HeiseSays, or support us via PayPal. Take care, guys. I'll see you next time.